Hello, hello. Sorry about that, everybody. So, good day to everyone, and thank you for tuning in wherever you are in the world. So, I'm Coach Tony, and this is a Hola Prime market news update. Now, let's see, the U.S. equity futures are trading relatively flat this evening ahead of this week's highly anticipated Federal Reserve meeting. The S&P 500 it closed Friday at 6,584 after a pretty modest move. Modest move is down 0.05%, just shy of record territory. The Nasdaq, though, it continues its impressive run, gaining essentially 0.5% on Friday to close at fresh all-time highs, 22,141. This is basically driven by continued strength in big tech names, Mag 7 specifically. Now, the Dow Jones had a tougher session, falling about 274 points, or about half a percentage point, to finish 45,834 for the week. Now, all three major indices, they posted solid gains, NASDAQ leading up 2%, followed by the S&P up 1.6%, and then basically the Dow gaining 1% on the week. In international market news, let's see, we have several notable developments basically on the global front this weekend. And the IPO market is one of them. It's basically shown remarkable strength in 2025 with 165 new listings in the first half of the year, representing basically a 76% increase over 2024 into 2025. Now, this week, we saw continued activity with companies like Klarna, Legends, Gemini making their public debuts on the market, signaling basically renewed investor appetite for new offerings, which is a great thing for markets. Then in major corporate news, Microsoft, OpenAI, they've basically signaled a non-binding memorandum of understanding that it paves the way for OpenAI's restructuring into basically a for-profit company. Now, this is a landmark agreement. It could basically facilitate a potential OpenAI IPO and represents obviously a significant shift on how AI companies structure themselves for growth and investment. Moving on, let's see some of the US dollar futures FX pairs, not my specialty, but a lot of people love talking about them. Basically, the US dollar, it showed mixed performance today amongst major currency pairs as traders position ahead of Wednesday's Federal Reserve decision. Eurodollar, EUR, USD, it's currently trading around 1.1735, showing modest strength as European markets anticipate, again, the Fed's first rate cut of 2025. We'll see. Let's see. British pound, US dollar, it's holding near 1.3550 as the pound maintained resilience against rate cut expectations. And then US dollar, JPY, continues to trade in a range, let's see, somewhere around 147.78. Basically with the yen showing relative stability despite divergent monetary policy expectations. Now, the Swiss franc, that's the last one I'll go over. Swiss franc, it's kind of a safe haven currency. They're honestly seeing modest demand, the safe haven currencies, as uncertainty around the Fed's policy timing persists. And I assume that that's going to continue into this week. Moving on to the cryptocurrencies, for anyone that's crazy about cryptos are basically showing strong performance this weekend. Bitcoin, it's trading up $116,000 per Bitcoin. Up from recent levels as macro conditions appear favorable for risk assets ahead of the potential, again, Fed easing. Will it happen? Yes or no? Ethereum, the second one, stablecoin. Let's see, Ethereum, it's pushed higher around $4,670. It basically benefits from continued institutional adoption and infrastructure improvements. The broader crypto market is positioning for potential liquidity inflows as traditional yield alternatives become less and less attractive following rate cuts. Moving on to the commodities update, something that everybody loves to talk about. Let's talk about precious metals here. They're basically at the center of attention, with gold hitting all-time highs. I want to say $3,673 an ounce. Again, heels of the Fed rate cut expected to intensify the price of gold. The yellow metal has essentially gained 8% in the past month, and it's up more than 41% year to date. Now, silver having an even more spectacular run, reaching 14-year highs above $42 an ounce. We were in the thick of it last week with silver. And silver is benefiting from both monetary policy expectations, industrial demand, and the like. And then lastly, WTI crude, U.S. oil. It's currently trading around $63.50 a barrel. It's down slightly as demand concerns are basically weighing against geopolitical tensions. So energy markets, they remain in focus on the essentially around global economic growth prospects. And then, of course, you always have the OPEC production decisions that can sway into the energy markets. And then lastly, we'll finish up with the key events this week. Now, as I said before, many times throughout this market update, it's the spotlight is on Wednesday's Federal Reserve meeting. The meeting's actually 2 days or a day and a half, if you will, between the 16th and 17th, where markets are widely expect the first rate cut of 2025. It should be a 25 basis point reduction to the 4 to 4.25% range that we've been in. Now, this would mark a significant shift in monetary policy after the Fed essentially is holding rates steady all throughout 2025. So Tuesday, it's actually going to bring U.S. retail sales data, which will provide crucial insight into how the consumer spending is going ahead of the Federal Reserve rate decision on Wednesday. And then we also have several earnings reports from major companies that could potentially influence sector rotation as we move throughout the week. Now, without further ado, it's time for our weekend market analysis. And let's turn it over to Quiet Markets with myself and Coach Alex.
Hello.
Hello. Coach
How
Alex,
are
how you
you?
doing?
Yeah,
I'm doing
really
quite
good.
well,
Thanks, mate.
quite
What about
well.
yourself? Love it.
Yeah, I'm doing quite well over here. All the way out here in Boston. Where are you hailing from tonight?
I'm in sunny Melbourne, down in Australia.
Perfect. That's awesome. I was gonna say, it's probably a massive time difference. Obviously, it's
Yeah,
9 p.m. Eastern time over here. So, yeah, Melbourne, Australia. That is a hop, skip, and a jump away.
it absolutely is. Yes, currently it's 11 a.m. over here.
Yep, yep. Absolutely. I was gonna say, how's the summer been for you?
Well, it's just turned spring. 15 days ago? So hay fever
Yeah,
season
yeah.
is out and about, and I'm getting absolutely destroyed by the pollen in the
Yeah,
air.
yeah,
That's for sure.
yeah. Same thing happens over here. Same thing. It's almost like clockwork, right? Just check the calendar and you
Yeah.
know when you're going to get blown up in the nasal passage. It's ridiculous. And it seems like every single year it gets a little bit worse. I don't know, something to do with the air quality, maybe.
Yeah, well, your guess is as good as mine, but yeah,
Yeah.
I've been up in the anti allergen tablets, that's for sure, and it doesn't seem
Oh
to be working,
yeah.
so I need something a bit stronger.
That's okay. That's okay. I'm sure that you'll be all right, at least for this session. So hey, man, it's great to have you. For everyone watching, actually, this is the first time that both Coach Alex and I have actually collaborated.
Mm.
Generally, we find him on the Forex Fire session, right?
Yes, that's
Yeah.
correct.
Yep. Awesome. Yeah. Yeah. And then obviously you got Coach Michael Tiger, a couple other guys that
Mm-hmm.
are always looking at the forex pairs, the cryptocurrencies, all that. I'm obviously on the futures side. I don't, it doesn't say it on my shirt, but yeah, I'm part of the futures coaches myself. And once we kind of get into things, I can give you a little bit of a background on myself, and then we can kind of swap stories and talk about a couple of the markets that we're looking at. But it's been a pretty, I want to say, muted um, Sunday evening, at least here in the States. NASDAQ is one of the main things that I end up looking at, and we're just doing nothing. I mean, I can kind of expect this, like I said, muted behavior amongst markets to prevail Monday, Tuesday, maybe into the beginning of Wednesday, but anything could happen. It does seem
Mm-hmm.
as though people still believe that there's going to be a rate cut of 25 basis points at least on Wednesday, which is kind of out of the ordinary for me. I thought that the market would have, you know, filtered out some of the BS in some of these economic numbers. Like, at least on the United States side, it seems like if the Federal Reserve reduces the rate environment over here, it's just going to lead to more inflation. I mean, I have no idea, but I know a lot of people that are sitting on the sidelines, waiting to buy homes. And at least in the United States, the picture of U.S. housing are already extremely expensive. And I think that's kind
Mm-hmm.
of the only thing that's not taking U.S. housing to the next leg higher is having higher rates so that people can't get mortgages. So
Mm-hmm.
it's quite a interesting predicament that the United States is in right now, and it seems as though Jerome Powell, our Federal Reserve Chairman, has had his work cut out for him, both on the data side, trying to sift through what all the economic data means, and how to figure out see the future through the crystal ball. But then, of course, he has this political drama that always seems to follow him around from the White House and
Yes.
trying to get him axed, but it is what it is. I mean, it's just, I guess, par for the course with the job. So,
Mm-hmm.
but yeah, I mean, what's your take all the way over there about what the heck's going to happen this week? You think we're going to go for a rate cut, or do you think everyone's a little overly optimistic?
I think, well, I was listening to Coach Tiger in the morning actually
Uh,
talking about this exact same thing, and it was discussed yeah at length. So yeah, I had
uh-huh,
it's going to be funny because he's got a very expert opinion on it, so I'm not going to hold a candle to it. But
uh-huh.
he seemed quite sure that the 25 points was going to happen. That was my
Yeah,
overall
yeah,
take from what was
yeah,
happening
yeah,
earlier in the
yeah,
session.
yeah. Yeah, well, see, that's the interesting thing, and it's definitely an interesting thing from my point of view, is that I do get on here, I talk to some of the coaches. I'm obviously, trading on the live stream with some of the other futures coaches, and they have various backgrounds. And then, yeah, you talk to someone like Coach Tiger, who's sifting through all the economic data like he works at the Federal Reserve. So you get
Yeah.
a wide breadth of different opinions and different views. A lot of people just look at horizontal, vertical view, but like Tiger's definitely like looking at it from, I don't even know, some sort of angle that's not been discovered yet. So his insight is
Yes.
always is always tremendous, and it makes me think. But where I come from, so I come from more of the institutional background. Being up here in the
Mhm,
northeast part of the United States, Boston, New York City, Connecticut, hedge
mhm,
fund capital of like the world, maybe Connecticut is. I
mhm.
don't know. I talk to a lot of
Yeah.
guys on the institutional side. So again, like they are of the thought that there's no way that he can um, justifiably reduce rates without having it lead to more inflation. And it's one of those things where is
Mm,
is the labor market going to crack and there's going to be more layoffs and more people that are jobless in the United States before the Fed can blink? Or is it going to be that they are very, very strong on their second mandate, which is like keeping inflation at 2% or 2.5%,
mm,
whatever it might be? But obviously, the first mandate of the Federal Reserve is to gain maximum employment in the United States, and we are seeing some cracks on the labor side. So I don't know
Yes.
which one he's gonna look at first. That's kind of the toughest part. Like if he reduces the interest rate to four below 4%, something like that, then it's going to be inflationary. So he's been in between a rock and a hard place for sure.
Yeah, absolutely.
Yeah. So but everyone's going to find out on Wednesday. So it is what it is, right?
Yeah, it's going to be a big moment.
Yeah, absolutely. So expect a lot of volatility, and I guess if you're trading, try to not have a position on during that time because
Yeah,
it's going to get a little bit crazy. It's going to get a little bit
yeah.
crazy. So yeah, I mean, I think that's a pretty good segue into I guess backgrounds, right? Because as I said before,
Mhm.
this is the first time that both myself and Coach Alex have been on the stream together. So not sure if you know much about me. I hope you don't, and I can paint my own picture here. But
I do not, so
basically,
paint away.
yeah, that's good. Good. I was gonna say, so basically, like I said, I came from the institutional trading background. I had a commodity background before the institutional equities and
Mhm.
futures side. So yeah, I was trading nat gas. I first started trading natural gas down in Washington D.C. for like a utility, and they had like this hedging portfolio, and then we were taking uh, risky bets on essentially figuring out what the price would do in natural gas, based off of how our
Yeah.
portfolio was hedged. And then I kind of moved on and started doing a little bit of precious metals trading. So again, kind of in the thick of it from the commodity standpoint. And then I was like, screw it. Like if I'm gonna be trying to make as much money as I can while I'm young, then I guess you got to go to the institutional, like Wall Street side. So I got a job at an institutional broker dealer and was there for about 7 years. And then I left. And I actually just
Mhm.
left in January 2025. So I've been this
Oh,
freelancing, you know, trader for not long, not long. So it's definitely
yeah.
been some growing pains. Obviously, a little bit of a change,
Mhm.
not having the extreme data insight into the market, But I think things have
Mhm.
been pretty good so far, and obviously, I found a home here at Hola Prime, and there's a crazy, like I said, crazy breadth of different trading styles, different backgrounds, and it all culminates or at least capitulates into these sessions: quiet markets, Forex fire, the futures takeoff session,
Mhm.
and it's awesome. It's awesome. It's invaluable
Yeah.
insight, honestly.
Mm. Yes. Yes. No, I definitely
Yeah,
agree
yeah.
with that.
I was gonna say. So, how about
Oh,
yourself? What's your background here?
Oh well, probably you probably couldn't get closer to a polar opposite. If I'm gonna be honest,
That's good.
in a funny way. Um, it's actually very embarrassing how I got into trading in the first place. I was I knew of a friend of a friend of a friend, that sort of story, who was
Yeah, of course.
trading
I
and he
love
was
that. Yeah,
making money. Yeah, exactly. And I was like, oh,
yeah,
put me in touch with this person. And
yeah.
luckily, I got a few free lessons in there, and
Mhm.
then it turned out like this person was just a complete fraud, was not making money, all that sort of all that sort of deal. And I was
That's
like,
usually how it goes,
oh
right?
yeah, dodged a bullet there. But I
Yeah.
don't know, it's somewhere in there. I looked at it and I went, okay, there's something here still. Like I can see that there's potential, and from there got involved in basically a group of traders based in the
Mhm.
EU, and we all trade the same portfolio, and that was based on two pairs, which is Euro USD and Great British Pound USD. I know, very, very, very similar, but that's how we
Perfect.
started, and from there, I was under the wing of these people, these mentors of mine. I was up at the most ridiculous times ever because there's no jobs for it in Australia. There's absolutely
Yeah,
nothing.
yeah.
So I had to go overseas, and I'm up at like 3 a.m. trading away in my
Yeah, yeah,
bedroom,
perfect.
going, "Oh, the sun's up.
Yeah,
Time to go to bed." You
yeah,
know,
yeah,
and
yeah, yeah, yeah,
yeah,
perfect.
guess from there, I just moved into the Forex market, built my own strategies, started teaching people, and then yeah, Ola Prime came around and recently
Hmm.
started. So now I've also found
Nice.
a home here in this freelancing society of traders.
Yes, yes, yes. That's awesome. That's awesome. I love it. I love that is one of the good things about trading is that like all walks of life doesn't really matter how you got into it as long as you're
Mm.
profitable, right? I mean, hopefully you're
Yes.
profitable, or at least you
Yeah.
can spin the tail to tell people like how it is that you generate profits. But I mean, that's one of the good things about Hola Prime is that yeah, I mean, I have been around the block a couple of times in terms of meeting different
Mhm.
types of traders. I've I had I've done like algorithmic trading. I did that for like three
Oh yeah.
years. Creating algos, creating the indicators, all that type of stuff. Going fully automated into algorithmic trading strategies, right? Like literally hands off to 100%.
Mhm.
And it's tough. It's tough. It's tough going from like discretionary trading to something like algo trading because you just need to
Mhm.
blindly follow the bot that you've created. And,
Mm.
we already, when a position is like going against us, already think like you have that voice in the back of your head, like, you're an idiot. You're so stupid. You know nothing about trading. Like, get out now. Like, you're only down $5,000. Like, it's time to get out.
Yeah.
And with an algo, it's one of those things where it's like, hey, like I said, you got to blindly follow it because sometimes it's right, sometimes it's wrong.
Mm.
Sometimes you doubt it and it ends up being right and you just missed out on a massive windfall of a trade. So yeah, there's all different types of trading. And it's one of the reasons why I do enjoy the realm of finance and trading because you can have people from different walks of life. You can have totally different strategies. Again, as long as you're profitable, as long as you're maintaining some sort of consistency amongst your trading goals, then all the power to you. And of course, there's so much information. Like you can just literally go on YouTube and get a free education essentially in trading. Like you don't need to go to a $50,000 a year school university. Like, and actually that figure is almost outdated now because
Yeah.
I went to university almost what 10. I started like 10 years ago. Went to university, and now I was actually just
Mm.
talking to a guy, and he's like, yeah, mine's $75,000, and I was like, are you kidding me?
Yeah.
That's how much university is now. Is it like that over there in the Aussie area?
Yeah, yeah, yeah. Well, I also yeah, uni started in yeah 2014 for me.
Hmm. Hmm.
Expensive then, but now everyone's in. I mean, it's Aussie dollar obviously, but 70,
Yeah,
80,
yeah,
90, 100K in debt, and it's just like wow, we're
yeah.
we're just
Perfect.
chained before we even started.
Yeah,
That's
yeah,
it. So
yeah.
you got to be profitable.
Yeah, I was gonna say, and then actually that just piques my interest just a little bit more. Not to get into the subject matter too much. Do you have is it the government that loans out the money, or is it more privatized institutions that are loaning out student loans for uni?
It's the government. The government is
Okay, that's
practically
good.
completely in control of it over here. Yeah.
Yeah, yeah. Okay, that's good. That's good because we kind of went through that here in the United States, and I think it was just like immediately like, yeah, this is not going to work out, and the government is
Yeah.
basically the biggest lender of yeah loans to go to university, which is good. Yeah, it's good and bad,
Mm.
whatever. Here's what it is.
Yeah.
All you got to
Yeah.
do is get out there and make more money. God,
Yeah. That's
if you
it.
can't pay
That's
your
all you
student
got to
loans, you just got to make more
do.
money, guy. Yeah,
Yeah,
yeah.
exactly.
Easier said than
Get on
done.
your
So.
Bitcoin, start
Uh,
hedging, see what you can
Yeah,
do.
yeah, 100%. So what is your again, like I said, this is more of a how to and learning about you session than it will be talking about the markets. I mean, not that there's much to even talk about. Like I said, it's so muted out there,
Yeah,
especially
it's
in
dead.
the on the U.S. indices. At least nothing's really moving around. Silver, precious metals. We'll get into the charts in a little bit. Um,
Mm.
but yeah, I mean, if you got anything glaring that you want to show, then totally cut me off. But I mean, we can still just chit chat around. I want to know, what is your trading strategy or style?
So here at Ola Prime, well, I've got two right here at Ola Prime. You're going to see me scalping. That
Oh, of
that
course,
is what's
yeah,
happening. That's
yeah,
what
yeah,
I've
yeah,
come in
yeah.
for
It's
on the
good for the
1 minute,
content,
five
right?
minute chart. Yeah, yeah.
Yeah,
Exactly right. Exactly right. When you're with Coach Tiger or Michael, who are on the higher time frames, need someone to come
yep,
in
of
and
course.
get those trading numbers up. Get in
Yeah,
some
yeah, yeah,
trades. So
absolutely. Yeah, yeah.
that, that's what I'm here for. So yeah, scalping. Now I am here for the Forex market. So I've got
Hmm.
focusing on my favorite two, which is Euro USD and Great British Pound. Still where I
Yep.
started. That doesn't mean I only
Yeah.
trade that. However, with the markets being as they are, you will see me being around gold and also being around oil.
Hmm.
Just in case, well, the US markets, it's just sell, 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 essentially
Yeah, yeah.
at this point in time. And gold is just presenting a few more opportunities. So, although I definitely am within that Forex realm, I'll definitely branch out when needed to make sure that we can actually hop into something, especially coming up to the news on
Sure.
Wednesday. I do find the markets will stagnate. As you said, there's nothing really to look at. It's just kind of being at this current point in time. But yeah, I'm there. I'm more of an institutional trader as well,
Hmm.
sticking to price action essentially on the smaller time frames. So yeah, that's me.
Yeah, yeah, yeah. No, that's good. That's a pretty good strategy. And again, yeah, for me, I mean, I think it's really good. Depending on how far into your trading career you are, for like new traders, I always tell them, like, stick to one product. Whether it's one forex pair, or maybe two forex pairs if it's like the same quoting currency or
Yeah.
something. But like, stick to
Mm-hmm.
one thing, right? Try to learn the crap out of it and really just understand like how this underlying moves, like what affects it. And
Mm-hmm.
then obviously you can take those to different products, different forex pairs, as you see fit. But yeah, sticking
Mm-hmm.
with, like, yourself, you say you have like two forex pairs that you're always looking at. That's
Mm-hmm.
that's really what I always try to push onto people. And at least for myself, my number one tradable product is the Nasdaq. So the Nasdaq, obviously, for
Yeah.
people watching, it's the one of the major U.S. indices. Um, how long I've been trading it? Literally my whole career. I've been following it. But again, like, why is it? Some people ask, like, why is it that you recommend only one product or two products, at least to start? Well, because it's easier to learn that way, like I said before, but also because, again, from my institutional background, that's how it was run on the institutional desk.
Mm.
Like, we had five different, essentially, sector traders, right? One person trades technology companies, one person trades utility companies, one person handles, the Nasdaq, S&P 500 ES. Sometimes they overlap, but whatever. But I mean, there is proof in the pudding, where it's like, you stick to one thing, you learn the crap out of it, and then, like, you're the go-to person. You're your own expert, essentially. So when something's happening and markets get really hairy all the time, seemingly, you can kind of help yourself sift through the weeds of what's actually going on. Why? Because hopefully you've seen it before. So like that's one of the reasons why I think it is so important to be just sticking to one or two pairs, or one or two tradable products. So in terms of hierarchy, for me, it's Nasdaq, silver, and then crude oil occasionally. Um, that's the Hola Prime hierarchy. Personally, it's Nasdaq, silver, gold for me. So like, I'm always looking at the precious metals. I've actually, like I said, I did the precious metals stuff, and I did consulting for big metals and mining companies, at least just for the price and like arbitrage side of their portfolio. So yeah, so precious metals have always been kind to my heart, and obviously you living in the
Mm.
Queensland or whatever the heck it is that you guys call your big
Yeah.
continent. Um, like I think you're like the number one. Are you guys the number one country for mining gold, or is it Canada?
Yes. I think we are. I think from the top of my head, we are the number
Yeah,
one country.
yeah,
Just
yeah.
the
I would say
whole
so.
west side of Australia is just mining, mining, mining. Like that's all it
How
is.
is it that
That's
you
all it
can't
is.
just go out there and like purchase property? Like, do people do that? Like, and then they strike
Yeah.
gold, and it's like, holy crap, I'm a billionaire now. Like,
So, genuinely, like it happens. Like we've got
mhm.
opal miners that are like in the center of Australia, and they'll
What the
like the
heck?
gold rush like still exists in parts of Australia where you've
Yeah, yeah,
got
yeah,
loads of people out there just with actual like machinery,
yeah,
just
yeah,
going out and
yeah,
just lots of land and just going, hey,
yeah,
I think there's opal or there's quartz or whatever whatever it is
yeah, yeah, yeah,
essentially. But yeah, there's
yeah.
random gold rush towns still going on in Australia.
Yeah, yeah, yeah. I was actually just reading about that actually because one of our futures coaches, his name's Coach Daryl. He's actually doing like a weekly gold update for Hola Prime TV. So they're gonna put it on YouTube and put it on a couple other places. So yeah, he's doing a weekly gold update, and then it got me thinking, like, because I'm always watching the gold and the silver markets. Um, I was like, yeah, like what the heck is going on? So I got to reading. And, like going into the economics of mining, not to branch off from the trading in the markets that we're going with here, but for anyone that wants a quick read, yeah, definitely go look at the economics of gold mining because they actually were talking about Australia, how, the price of gold like above $3,600 an ounce. Um,
Mm.
Different mines have different economics, right? So like some of the gold is really easily accessible in terms of mining, and then some of it's really hard. And then they come down into like purity, right? Where they have to mine, I don't even know how many hectares of or square cubic miles. I don't know what you guys converted into kilometers squared or something. So
Yeah, yeah, yeah,
and
yeah.
there's only like so many grams of gold in all of that, and sometimes it's higher content
Mm.
of gold and sometimes it's really low content, so they have to like extract more or more earth in order to get it. So as gold price appreciates, like, we're above $3,600 an ounce, well above, some of those older mines are now economically viable to go out and mine, even though it's way more expensive to mine the gold out of those crappy mines that used to exist, right? So
Mm.
yeah, so that's pretty much what's happening, which is, good for some people, bad for others, but hopefully there's not too much I want to say environmental impact on your
Yeah.
beautiful country.
Oh well, we'll see, mate. There's people hunt for gold everywhere. I know. Again, this is detracting a little bit, but there's a
Yeah,
guy
yeah,
that genuinely lived down my street, and he's retired from. It's called gold sniping over here, and you go out just like 2 hours away into a stream,
yeah.
and you'll literally
Uh-huh.
just try and find gold in it. And yeah, he's retired. He quit his day job as a teacher. He bought himself this
It's
big,
insane.
massive house, this fancy
Yeah.
car, because
Yeah, yeah,
there's
yeah, yeah,
that
yeah.
much rain and gold
Yeah, I
around
was gonna
here.
say. Yeah.
Just get it from a stream, just swimming around.
Uh-huh. I was gonna
So
say, then what the heck are you doing sitting in your chair on this live
yeah,
stream, dude? You should be out there. You're burning daylight. Go get
it's,
your go get a bowl from the kitchen and start panhandling for the gold in the stream. Why not? Yeah, that's
honestly,
awesome. I mean, those stories are just honestly like crazy because it's like so old time. Like, you don't just like
yes.
create wealth out of like the earth anymore. Everything's all tech based. I make
Mm,
$1 million overnight, and like I just clicked a couple of things on the computer, or you just got lucky, right? So
yeah,
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 those
yeah, yeah,
those
yeah. That
stories are
happens a lot.
awesome. So kind of, yeah, going back to the trading, good little sidetrack there. I'm sure there will be more of them as we continue on. So for me, when I'm trading the Nasdaq, my strategy is really just it's a 50. I really do the 15-minute opening range. So it's called orb. more commonly
Mm-hmm.
ORB, opening range breakout strategy. It's literally a strategy that's been around forever, ever since like the late 90s and the small cap heyday, where small cap companies, right, like smaller capitalization companies, they used to just break out of their 15-minute opening range. And if it broke to the upside, then it was just like up and to the right for the rest of the day, or to the downside, then it would just be like down for the rest of the day. So that's literally the strategy that I do. Been doing it for many years now, and it really never fails. Generally, it is a trend following strategy. So I do look for trend. Like it's very hard for me to get in there and try to scalp, um, only because my moves in the Nasdaq are like I'm looking for like over a 10-point move, and like usually some people that are scalping in the Nasdaq are looking for like 5-point move. It's like really minute, right? Just a really quick push up or push back down to support resistance, whatever. That's usually what they're doing. Not me, only because, like I said, it's trend following. It pays me way more to not make $100 in a minute, but
Mm-hmm.
instead sit around for, maybe I want to say I don't even know what my average hold time is on Hola Prime. I mean, I could probably look at it on the back end of our system. So we trade through something called Project X. And that's our futures trading platform. I know that you guys utilize what GUI trade for the
Yes,
for the uh,
correct.
the forex execution stuff. So yeah, a little bit different.
Mm.
Is there any I don't even know how to call it, like metrics that GUI trade provides you guys, like to like see how you're trading, what your win loss ratio is, your good days, bad days. Does it have that like back end capability?
Yeah, it does. I mean, I've used reporting tools for futures as well.
Okay.
I mean, different things like Rhythmic and
Yeah.
or
Yeah.
Top Step, Top One. But it's not as
Mhm.
good. But
Mhm.
they do have reports. I feel like with for whatever reason, and I feel like it's Forex as a whole. You need your own reporting software
Sure.
to get the most out of it. So short answer, yes, it does. Long answer, maybe if you are doing this or anyone watching, you
Yeah,
want
it
to keep
depends.
track of it yourself as well.
Yeah, yeah, yeah. Yeah, of course, for sure. Yeah, that's awesome. That is awesome. So, I mean, I guess it's tough. It's tough to say actually, because does the back end reporting make you a better trader? Maybe. Or maybe it just makes you feel bad about your trading strategy. I'm doing too many trades, or oh, I'm losing a lot. I only have
Yeah,
a 30% win rate. And obviously a 30% win rate can be good. I mean, it can be profitable as long as the winners are outweighing the losers for sure. But yeah,
yeah.
no one likes to lose more than they win, I guess. So
Mm,
yeah.
mm,
So I think it's actually a pretty good segue. Back end, you can actually share my screen whenever you'd like. I do have I mean, I have like the platform that I can kind of dig into a little bit, and we can actually look at one of the accounts that I do have, that I've been trading live on the live streams, for about, I want to say I've had this account. This will be like the third week, maybe. We can also dive
oh,
into, again, like I said, like the calendar. It actually has like a calendar that shows you all of your P&Ls every single day. So yeah, so this is the Project X futures platform, and for anyone watching, we are gonna go back and forth a little bit. Again, myself, I trade the futures markets, and Coach Alex, he is here for the forex pairs, and only the best ones, euro, dollar, stuff like
yeah,
that, right? The ones that people care about. So maybe he can
yeah.
give us a little bit of insight on at least what's happening or what's not happening, because again,
Mm,
we do have the Federal Reserve, highly, highly, highly anticipated. I mean, people waited the entire summer, the summer months, at least in the United States, for this September meeting, which allegedly we're going to be getting a rate cut of potentially 25 basis points. So a lot of institutions, a lot of hedge funds, and then, of course, a lot of retail traders, guys like ourselves, have
yeah.
a lot of reason to not really be doing much and not taking huge bets in the market right now, because there could just be random bouts of volatility. There also could just be nothing happening in the market, which is called chop. And chop is one of the worst things for people like me that have these trend following type strategies. Um, and again, this is the Nasdaq. This is actually Friday's trade. So we have a couple of things that we can look at here on Friday's trade. Let's see here. So again, I'm kind of just going to go through how it is that I trade myself. On Friday, there actually was a economic data release. I want to say, what was it? Friday morning in the United States. I want to say it was like maybe ISM data, something like that, service manufacturing data. So there was some economic data. So there was a little bit of volatility around the 10 a.m. mark. U.S. equity markets opened, kind of, like I said, kind of muted. Couldn't really figure out what direction it wanted to go until that 10 a.m. economic data came. So it was just an immediate spike down, then just an immediate reversal. Again, nothing for me and my strategy to do. I do the 15-minute opening range, so I have to wait 15 minutes. So my opening range um, data points essentially start at 9:30 Eastern, and it runs till 9:45. Right, the first 15 minutes. So these two solid white lines, that is our opening range low, opening range high. Generally, what happens is I get a break to the upside, breakout to the upside, or to the downside. And I'm at least initially trying to play that first breakout. So we had it right here, right at 10:20. Here, I can actually make my screen a little bit bigger for everybody so that we can really drill down here. So we had our first breakout to the upside through that opening range high, that top solid white line, and classic, I guess, bear flag, if that's kind of your thing. If you just like to draw
Mm-hmm.
lines onto a chart and hope and pray that these lines hold and I don't lose a crap load of money, then all the power to you, right? But I like to get a little bit more technical than just drawing a bunch of lines on the chart. There's got to be volume, there's got to be price to like obviously indicate that that move is sustained. So there was we don't have the average volume, but there was above average volume um, to justify this move. So you get this bull flag, like I said, if that's your thing. You get the actual bull flag getting painted. So this is the flag pole, this is the bull flag, and then you generally have a continuation of that. It was really good because that opening range high, like I said, that solid white line, that was providing support. Okay, so that was a good support level that held in, which told me that yeah, we're probably going to get a continuation. And then you have some of these MAs, some of the moving averages. So the little green line that you can barely see on this thing, that's the 9 moving average. So it's the shortest moving average that I'm looking at. The purple line is the 21. And we were kind of just riding that up, riding that shorter moving average to the upside. Then we kind of just got into this consolidation channel here. There was nothing to do until we had a breakout above. So we made it like $400 in that little breakout. But it was right up to this solid green line, which is my first standard deviation level of the 15-minute opening range. So that was a little bit of resistance. We rejected off of that. And then, we were kind of really like not really doing anything until the later afternoon, which was a little bit ridiculous. I generally hate days where there's nothing to do in the morning and then the afternoon, especially on a Friday, because usually all the trading is done like before lunchtime on a Friday, and it's great. Like usually you have a good P&L if you did the right things. But that was kind of not the case on Friday, so we had to wait until about 3 p.m. Eastern time, which is like they call it power hour over here in the United States. So between 3 p.m. Eastern and then 4 p.m. Eastern, when the market closes at 4 o'clock Eastern time, obviously. Yeah, so that's power hour. I generally don't like to trade it. I like to have no position at least 30 minutes before the U.S. equity closes. Why? Because there's usually unseen volatility happening, especially going into a weekend, into this week. There's the Federal Reserve meeting again. It's coming up on Wednesday. So a lot of institutions are like, positioning their books, like, taking risk off the table, putting some risk on, doing different option stuff. And also there was I believe there was contract rolling that was happening that day, if not today. It usually happens on Fridays. So I need to double check that to make sure that I'm trading the correct contract, because I know this NQU means September 2025. And I want to say that the September contract has expired. So I'm going to double check that in a second. You guys on the Forex side, you guys don't have to deal with contract expiry at all, do you?
Yes.
Yeah. So it makes your
Very
job a
true.
little bit easier, huh?
Yeah, don't have to switch over, which is very handy.
Yeah, yeah, yeah. I know that, like I said, from my time on the algorithmic side, man, it was ridiculous because I mean, I guess like maybe you could find out some sort of workaround, but a majority of algos will only trade the product. I mean, they'll only trade the product that you set the algorithm to trade, right? It's not going to start making decisions, for itself. It's not some sort of AI, decision maker. It's just going to
Mm.
trade the thing that you tell it to trade. So, yeah, we would bump into that all the time. It's like, oh crap, like we have contract expiring today, and of course, like there's a huge
Yeah.
liquidity drag on the contract because like no one's trading it, so it leads to crap
Yeah.
price fills, like terrible trading action, and it's just like, God, someone needs to be on top of the contract expiry. So again, we'll double check that. But yeah, and then we had a really nice sell off. That again, a lot of the futures coaches were net short, both in the Nasdaq and the S&P 500. So I think everybody turned their P&L into a green P&L. And for everyone that was green, just added to the number, which was great. So yeah, it turned out to be a really, really solid trading Friday. And then obviously after that, after the 4 o'clock close, nothing really happened. Leads us into Sunday evening. Let's see here. Where's 1800? Everyone loves military time on the futures side. 1800. So we are trading in, I want to say it's a 40-point range on the NASDAQ, which is freaking nothing. So nothing is
Mm.
happening in the NASDAQ right now. So please, for everyone in the chat, don't ask me for a NASDAQ trade. There's probably not going to be
Yeah.
one right now, unless, I don't know, North Korea says that they're launching missiles towards the rest of the world, something like that. And then it's sell, sell, sell. And for everybody in the chat, please sound off. Tell us where you're from. Ask any questions that you might have for both myself and Coach Alex. I see a couple of guys in the chat, Delco, Sympathy. I don't know if you guys are still here. Again, like you guys are putting in some of your comments. Let's read one off. I'll read one off from Delco. He says, I think that it's a very good chance for a small rate cut. That's interesting. Okay. Seeing that last week's price action, even during the CPI and jobless claims corrections or revisions, the jobs market is really bad. Yeah. I mean, it's definitely not turning up. That's for sure. So it might be time for a small rate cut. Yeah. Delco. I mean, you're not wrong. You're not wrong 100%. And like Coach Alex and I were talking in the beginning of the segment, basically the Federal Reserve's number one mandate is for maximum employment. They always talk about that. You'll always see these old dudes with white hair talking about how we need maximum employment in the United States. And then they'll give you a ton of reasons why we don't have that. So that is their number one mandate. But what they're contending with right now is if they do cut, will that lead companies to be more expansionary? Okay. And expansionary, not to get into an economics 101 course, but there's multiple types of expansionary policy that can happen from a Federal Reserve / U.S. Treasury standpoint. But obviously, the easiest lever for the Federal Reserve is just by adjusting the interest rates. Why does that happen? Because if they lower interest rates, hypothetically, companies can go to the banks and borrow more money at cheaper rates, and then they can be expansionary with that money. They can go out and hire people. They can go out and, build new property, plant, and equipment, which is just a fancy word for more factories and all that type of stuff, which leads to more jobs, more expansionary economies of scale, all that type of stuff. So that's really the question that the Federal Reserve is deliberating over when they have these little talks that they like to do. Um, yeah, it's just one of those things where it's kind of just wait and see. I mean, they always say that they're data dependent, and that is true, that they do wait for data to come out. But one of the problems with that data is that it's lagging. Okay. It's always like from previous weeks or previous months, and it always gives you a looking backwards picture of what the economy is doing. So that's always tough, right? Marry that with the political environment that we have right now. Obviously, the Trump administration wants as much expansionary policy as they can get, because it leads to more jobs, it leads to more pay, more economic growth. So yeah, like I said, in between a rock and a hard place. What does that mean for the Nasdaq and for the precious metals markets? Well, precious metals, they're always like inflationary, right? So if there's more inflation, then the precious metals markets should rise as a hedge towards inflation. But then what does it mean for like stuff like the Nasdaq and the S&P 500, US 30, which is the Dow Jones? It means that, honestly, it's kind of tough to say, right? If we get a rate cut, then the markets are going to scream higher, allegedly. And if we don't, then we might have a sell-off, a little consolidation, but maybe a leg higher. Why? Because we just went through the corporate earnings releases a couple of weeks back. Like the last month, we've been hearing from all the major U.S. corporations on how they've been doing, and it seems like the AI trade is back in full swing. Like it was taking a pause for a while, kind of in the March, April, May timeframe, and people were like, "Are we really going to keep on pushing Nvidia above $5 trillion or whatever? How many $1 trillion it is? Is it really worth it? 270 times forward earnings. Is that justified? I mean, I guess, but yeah, that's kind of what it means for the markets, and obviously that's one of the reasons why we might see a little bit of a muted reaction amongst the U.S. indices, because they just don't know. It could break to the upside, it could break to the downside, but also they just don't know about what the Federal Reserve is going to do. So, all in all, it is what it is. We just got to be out here watching your position size, watching, the things that you're trading, and watching also the times that you're trading. Okay, usually you want to trade during high volume times. Volume matters. Why? Is because if you have price go screaming higher really quickly, but there's no volume to sustain that, it can just as quickly come back crashing down. So you got to look out for that type of stuff. And as we've seen, I mean, you can barely see the volume at the bottom of the chart that I'm presenting right now. It's just there's nothing going on, and there's less volume right now than there was after the market closed on Friday, which is like ridiculous, because who the hell is trading, 30 minutes before the lockup of the weekend, because the futures markets get locked up over the weekend, and then they don't open up until 6 p.m. Eastern time on a Sunday evening, which is what we're looking at now. So again, nothing going on. Crazy. I don't know, Coach Alex, is there anything that you want to add, or you want to explain about how no rate cut or a rate cut could potentially push the euro dollar or whatever other currency pairs you're looking at?
I mean, yeah, it's. I shouldn't say it's very basic, but it's just it's only because of your explanation from before.
Yeah.
If we get that inflation, uh, I mean, we all know what it's going to do to the DXY. We all know what it's going to do to the US dollar, and I would be,
Yeah.
as you said, hedging. would be going for gold, and I
Yeah.
would be very bearish on
Yeah.
the
Yeah. Sure.
USD led.
Yeah.
That's
So I
it.
was going to
It's
say,
that.
I have actually never traded Forex. That is me
Really?
opening up to you
Wow.
and giving you a very damning piece of information about this 10-year trading coach. I've never traded Forex. Okay, obviously I'm not a Forex coach. I'm a futures coach. So
Mhm.
if you take a look at my screen, we can't pull up the Forex pairs within our
Mhm.
system. So if I wanted to look at euro, is this euro FX, the actual euro, or is it it's not euro denominated, or sorry, it's not dollar denominated euros, right? That is just the
Yes,
euro price, I guess. So one spot
correct.
179. How far off in terms of price is that from euro dollar? So what is euro
Well,
dollar
right
trading at right now
now,
for you?
currently 1.172. That's what we are right
Oh,
now, and
so
your point one point
oh
one
wow,
seven nine. Yeah,
wow.
and
So
we're one point one
oh,
seven
so
two.
it is pretty spread. So there is a difference,
Yeah,
clearly.
yeah,
Yeah.
yeah.
And
Well,
I was gonna say, like you guys trade in pips, right? And it's like, how many pips
yeah,
is that? It's like 700 pips. Is it?
so many.
Yeah. So it's like, don't trade the wrong thing, I
Oh,
guess.
absolutely,
Um,
yeah. I've seen that
yeah.
before,
So
where
that's
future
very
traders will come
interesting.
over. And,
Yeah. They don't understand like the difference between the two. So I was actually looking at that because, when we trade gold, right? The ticker is /GC. Gold's trading at $3,671, right? And it's probably is it trading lower than that, like $3,640 for you?
34.
Wow, yeah. So I mean, again, like just the differences are massive. But I guess I mean they should be trading in tandem. Um,
I
if you're
know,
trying
I
to
know.
if you're trying to look at like futures indicators and then apply it to like XAU USD, right? So
Mhm. Correct.
yeah, that's pretty interesting, actually. What is your take on gold? I mean, that's a loaded question, only because
Yeah,
you're gonna give me your take on gold, and then by Wednesday you're gonna be wrong. Because like
yeah,
anyone that answers like a question, oh, what do you think about gold? Is like, I think it's going up. Like that's it. I mean, I
yeah.
wouldn't want to be short. Like Coach Tiger always says. I mean, Coach Tiger, they look at their little um I don't even know what it is, like a table with like bullish bearish sentiment,
Yes,
and all the different metrics
yes,
on the different currency pairs and on the different underlying precious metals, stuff like that. And yeah, Tiger's like, yeah, I wouldn't want to be short. Wouldn't want to be short,
yeah.
especially with this economic environment, with the rate environment that's coming. Yeah. So
Mm.
again, um, let's see. Hang on here. I'm just going back into the chat. Yeah, for anybody just tuning in, it's both myself, Coach Tony, and Coach Alex. Coach Alex is here for the Forex pairs, and then I'm here for more of the futures market. We're just messing around, taking a look at a couple of different futures contracts here. We're looking at a chart of gold. So if anyone has any insight on what the heck gold is going to do, looks like it's in a nice little consolidation all last week. Nice little
It
range,
is.
trying to find its footing before it takes the next leg higher up to $3,800 an ounce, I guess. So if you're in the chat, thanks for tuning in. Be sure to sound off where you're from. Any questions you might have for either myself or Coach Alex, feel free to throw them into the chat. Um, let's see. So Icon Breezely, he says, hello. If you don't mind me asking, what do you think about Kita Coin? I have no idea what Kita Coin is, Mr. Breezely.
No clue.
Kita Coin. I was gonna say, isn't there? There's a couple of coaches. Is it who is it? Coach Paul and someone else that trade the cryptos. And that'd be
Yes.
a good question for them when if you tune in tomorrow morning. We're going to have, Forex Fire, and there's going to be a segment on the cryptos. Be sure to ask what Kita Coin is doing and where is it going. I am actually looking at a chart of it. I don't know. It looks kind of bearish to me, at least on the day. On the year, it looks like any other crypto. I mean, honestly, it's just you wouldn't want to put your savings account into it. I'm sorry about that, Icon
Yeah.
Breezely. Do not put your savings into Kita Coin. Again, you got to be prudent. You got to be careful with the cryptos. I don't know what your take is on it, Coach Alex, but I'm always kind of weary of some of these cryptos because I was weary. I was severely weary when the new Trump administration came in and they weren't making any
Mm.
crypto policy, because I know that was something, obviously, myself being from the United States, very in tune with the political environment that's here. It seemed like it was bipartisan, meaning obviously both sides want more crypto regulation. They want it to become more mainstream. I'd say that I don't know if either party was really sincere on that or if they were just saying that to get people that owned cryptos to vote for them. I don't know. I digress. But there are a lot of cryptos out there. There's a lot of scams out there. I learned a lot about cryptos literally over the past year. I myself owned Bitcoin many, many years ago, too many years ago that I almost feel embarrassed to tell you guys that I even owned crypto, because yes, I did own crypto. I owned Bitcoin when it was $5,000. This was back in, when was it? I was at undergrad. So this was back in 2016. Yeah, 2016, 2017, maybe. Um, I bought it at $5,000. It took a run up to $9,000, almost doubled my money. Thought I was a genius. I was studying finance. So I was like, yeah, guys, I know. I print money out of thin air, right? So I was like, yeah, I got this thing called Bitcoin. I just doubled my money basically, and I sold it at $9,000. Crazy,
Yeah.
totally insane. Um, Again, hang on one second here. Hang on, are we cutting out? We having a little blip here. Can you hear me? Okay,
I can hear you fine. I'm all good.
Alex, you there?
Can you hear me?
Yeah, I think we're getting a little bit of
Ooh.
interference here, guys. Sorry about that. I'm not sure if it's our system or if it's maybe the back end here. I got a good connection here. Can interact with the market 100%, getting my price feed, and you guys can see yeah, it seems okay now. Okay. It's probably just the CIA patching into our live feed here. Okay, so now we have even more viewers. So yeah, like I was saying, yes, I did own Bitcoin when it was 5,000, sold it at 9,000, thought I was a genius. But that's just how it goes, guys. Like, these coins. I mean, look at the Trump coin, right? I mean, Trump coin was like pennies, and then it went up to like $75 in the matter of 4 days. I actually know a guy here.
Mm.
He worked at engineering company, and he was in that Trump coin rise that happened a couple months back. And he, just a regular guy. He's like 32 years old. Regular guy. He's probably making like 100 grand a year, right? Good salary. Okay for engineering. Okay if you're living in, well, it depends on the part of the United States that you live in, because believe it or not, people, $100,000 a year goes further in other places, and it doesn't go so far in certain parts of the United States. Here, you still live like you have nothing. So,
Yeah.
yeah, I think he actually made, how much was it? It was 600 grand. He made 600 grand over that weekend. He bought it when it was like, I don't even know, like pennies, and then he sold it when it was $25. Okay, that was just the beginning of the ride, because then it went up 3x more. And he could have had like almost 2 million bucks. But that's the craziness of the market, guys. Like, and that's what you see in cryptos, is that, sometimes you buy it at really low prices and it goes screaming higher. Say you put $100 into a crypto, some sort of crap coin, and you guys know what the real word is. I just can't say it on this live stream. So you buy a crap coin, it goes up, 11,000%, and now you have like $5,000, and you're like, what are you gonna do? Are you gonna hold it? You're gonna hold it, transfer it to your wallet, put it in cold storage, and just like, yeah, I'm gonna be a billionaire off of this in 10 years because all cryptos are going to the moon? No, you're gonna freaking sell it. You're gonna sell it all
Yeah.
day, and you're gonna be thankful that you made money out of thin air, right? So
Yeah.
that's exactly my thought process. That happened to me, and it's like that for stocks, guys. It's like, you have these really, really crazy high flyers. Usually it's a tech name, or maybe it's a biotech company here in the United States, and it goes up multiple 100%. What are you going to do? You're going to stick around to see what it does in 5 years from now? No, you're going to sell it, and you're going to put that money to work somewhere else. You're going to go lose in the Forex market, right? No, I'm kidding. I'm
Mhm.
kidding. Let's see. Um, yeah, guys, any other questions? Put them in the chat. We love it. Let's see. Key to coin. Yeah, we're on to the next one. Sorry about that, Icon Breezely. And he says, I mean, they are backed by an ex Google CEO, and they have an article by Google Cloud, and approved some sort of chain spec. Okay, let's see. A lot of things in that comment there. Okay, like stocks. Well, yeah, I know. It's like I said, I don't know anything about this Kita coin. It seems like everybody wants a piece of it, though. Whatever. Maybe we can see a little Kita coin pump overnight right now as we're talking about it live on stream. Um, yeah, you got to be careful, guys. Like, of course, every single altcoin out there is designed to revolutionize whatever it's trying to revolutionize. Okay, it's great if you have a revolutionary idea, but just like products, just like companies, if no one cares about it or no one's going to use it, then it doesn't matter how revolutionary it is. It's just never going to be adopted, and it's
Mm.
never going to be successful. So, like, it's the same thing with the cryptos. Like, everyone's trying to revolutionize whatever the heck they're trying to do, right? I guess, this one's backed by an ex Google CEO. Well, do you have that in writing? Um, because it's either Sergey Brin or the other guy.
Yeah.
There haven't been too many Google CEOs. They're still the founders,
Mm.
essentially. Yeah, so just watch out. And of course, there's a lot of scamming out there, which is again something that I just learned about in the last year because I started doing a little bit more digging because I had a couple of successful crap coins that I invested in, but like it's nothing real. Um, and it's crazy. Like this Kita coin. I'm sure that there's 500 Kita coins because there's scammers out there that are like, hey, this Kita coin actually has a big market cap and a big following, so we're gonna make something called Kita coin, and we're just gonna try to like gotcha. We're just gonna try to like get people to invest in this Kita coin, even though it's the wrong Kita coin. So you got to watch out for that type of stuff, guys. Unlike stocks, where if you didn't know, there's only one Nvidia. Okay, there's only one
Yeah.
Apple. There's only one Google. Okay, so you can't get it get it wrong by typing in like the wrong name. So these are the types of things, though, that I think that really need to be hashed out um, in the public arena, which is really the regulatory side. That like there's still so much scamming, guys. Like there's so much scamming in like these altcoins, these meme coins, whatever, and it's it's good and it's fun, right? It's totally cool, but it's totally detrimental to the market if you want to be taken seriously. Like, look at the stuff that I trade, look at the stuff that Coach Alex trades. Like, these are futures contracts or Forex pairs. They trade on centralized exchanges. There is nothing
Mm.
decentralized about the stuff that we trade. There's a million different agencies that are looking at the data, the trades that are going through the pipe. So there's no funny business to be had, but there's a lot of funny business to be had in the crypto space. So be careful out there, please. Um, Again, you're more likely to lose money in crypto, I think, or at least not in crypto. Okay, I'll revise. You're more likely to lose money in altcoins than you are to make money. So seriously. take that with a grain of salt. So be careful out there. Any other questions? Moving on. I mean, sorry, Coach Alex, do you have anything to add from the crypto space? Any stories? Any good and useful information with regard to cryptos?
So funny that you mentioned that because I was in on
Yeah,
that
yeah.
Trump coin. I
No
literally
way.
did
You
it
make money?
as a joke. Yeah, I did it. Like me and my mates were just talking about it. I was like, I'll put $1 in. I'll put $1 in. Like let's
Yeah.
go for it. And then yeah, it started to rise up, and I was like, oh, okay, there's something here, but I don't.
Yeah, yeah, yeah.
It was nothing. It was a
Yeah.
bit of a joke. But yeah, I think you're dead right. I think the scammers are everywhere, and they always are.
Hmm.
But like, it seems the ability to scam is just so incredible within the crypto spaces. And I've done
Hmm.
a bit, you know, dabbled in Bitcoin here or there, dabbled in Ethereum. That's I'm by no means a
Hmm.
crypto trader at all, but yeah, it seems that the majority of the stories coming out, you know, surrounding crypto are just not very positive. And that whole thing that you picked on, unless someone actually believes in the product and market sentiment gets behind it, then it's nothing. It doesn't necessarily mean that it's going to be amazing unless everyone's getting in on it and everyone's going yes, yes, like
Yeah.
let's do it. It's the same thing for, and I guess a bit of a segue, Fibonacci retracement tools, you know,
Oh, yeah, for sure.
psychological levels that loads of people use in the market. And, you know, I think
Hmm.
people have a misunderstanding about it because, yes, it can work, but only if Fred, Harry, and John and the rest of the street and the street adjoining and all these other streets go, yes, and have the exact same idea as you. You've got to get lucky in, I guess it is luck in terms of that. So generally, yeah, I stick to these centralized exchanges. Call me boring,
Yeah.
call me whatever. I'm going to sit here and I'm gonna plug away on the forex markets. That would be my advice.
Yeah, yeah, absolutely. No, that's a great it's a great piece of advice. And I think kind of to summarize, all the stuff that we've been talking about, the main point here, guys, is basically before you invest in something, you got to invest in the time to understand it. Okay, so you don't want to just jump into something because I'm sure just do some internal thinking. Is how many times you just jumped into a crypto, you knew nothing about it, all aboard the hype train, and it was on a road to nowhere. You lost money or you got out for break even, which is essentially lucky if you're investing in an altcoin. So again, you gotta be very prudent with your money, um, because as quickly as money is made, money's lost. Yeah, I'm sure if you guys are all seasoned traders or at least have been trading for more than a week live, you can for sure attest to that. It's just one of those things that happens. So again, thank you, Icon Breesley. I'm not sure if you're still in the chat here, but look at that. You just had a nice almost 20-minute segment on cryptos and all the mistakes to be had in cryptos and what to do and what not to do. So yeah, let us know. We'll I'm sure we'll all for sure be watching that Kita coin. So stay tuned.
Mhm.
Maybe we'll have to cover it in the weeks to come, or maybe even on the crypto on the crypto side, the crypto analysis, for sure. So again, kind of just jumping back in to some of these charts. I mean, this is the Nasdaq again. Like I'm looking at a couple of different things. You just got done saying that you were looking at or talking about Fibonacci levels. Yes, that
Mhm.
is one of the things that I think is so very important, is Fibonacci levels. And I know that they generally get overlooked. So I'm actually going to clean up this chart here, remove this drawing, and we're going to do a little crash course here on Fibonacci levels. So for anyone that trades the future side, again, this platform that we're utilizing, it's called Project X. It's a really intuitive, easy to use platform. The charts are provided by TradingView, which, guys, if you don't know TradingView, is essentially a charting software I want to say, it's not industry standard, but it's very, very popular. Why? Because It's easy to use. The learning curve is very short. Anyone can utilize TradingView charts. And a lot of different trading programs, such as Project X, are starting to incorporate the TradingView charts themselves. So here, again, we're going to do a little Fibonacci learning segment here. So this is the chart of the NASDAQ. It's a 1 minute chart. Okay. I'm actually going to shut off all the other indicators that I sometimes look at. And we just have a nice, clean, blank chart. Fibonacci's, what are they? They're basically math. Short answer, done. Right? No, I'm kidding. Okay, what are Fibonacci levels? They're essentially statistically significant levels that arise through the Fibonacci sequence of a low point and a high point on a graph. Okay, so how do you get to them? What do they mean? How can I benefit from trading Fibonacci levels? Well, a couple of different ways. First of all, I'm going to show you how to get to them on the Project X platform. And then I'm not sure, Coach Alex, if you wanted to, we could share your screen for a couple of minutes and you could just do the same thing. And then we could get back into my screen after. But this will just be like a really good how-to on the tools of, what's provided by each platform. So, and I'm not sure if you actually use the GUI trades for technical analysis or if you're using something else for the technical analysis and then you just trade through GUI trades. Which one is it?
Yeah, we use TradingView. We're allowed to use TradingView,
Yeah.
and then we place the trades through GUI trades.
Oh, okay. All right. So then we'll just keep it on my chart because it's, again, like I said, it's a TradingView chart. So it's pretty much the same usability. We don't have to switch back and forth here. So this is just the default layout, guys. 1 minute chart here. Nothing else, nothing special on the chart. So when using a Fibonacci level, it's basically going to tell you, like I said, statistically significant levels that can be identified through a Fibonacci sequence. So what do I mean by that? First of all, where do we find it? On the left side here, you're going to see this multiple line icon with 2 dots indicating these are Fibonacci points. Okay, so I click on that. It's selected. It turns yellow, right? I'm just going to go from the lowest point of the time frame that I'm trying to look at to now the highest point. Okay. So again, why is this important? Well, you're going to see in just a second. So I identified a low point, a high point on the chart that I want to essentially drill down a little bit deeper into. So what you can do if you're following along at home, see all these levels, 0.236, 0.382, 0.5. Not all these levels are statistically significant. Okay. And here's a little pro tip / masterclass tip. If you right click anywhere in your Fibonacci area, and you go to settings, okay, you're going to see all the settings of all the different levels that are essentially in Fibonacci. Okay. I'm going to tell you the ones that actually matter. Okay. There's really only, I think, 3 that kind of really matter. That's it. The 38.2, actually, sorry, hang on. I'm going to unselect all of them and then we'll select the ones that we want to see on the chart. Okay, so the ones that are most statistically significant, okay, so the ones where you can actually try to formulate a trade are 38.2, which is the 38.2% Fibonacci level, the 50, and then the 61.8. Those are really the only ones that I've at least found matter. Okay. And these are ones that we constantly use on the institutional trading desk. And when I was part of the institutional trading, we did smart money concepts, which is literally hunting for stop losses and, round numbers and all that type of crap to just try to maximize liquidity. Okay. The other thing that you're going to want to do, the other setting that you're going to want to change is if you scroll down, I believe, hang on, is it here? Or is it in the visibility? Hang on here. You're going to want to, oh, here we go. Sorry, it's at the top. So if you scroll up, extend the lines to the right. You're going to want to click that. Okay. And then you're going to want to go to template and then you're going to want to save it. Save that template. Okay. So I'll save this as stream. There. That's a good one. And then you're just going to click OK. Okay. So now what I have here is the statistically significant Fibonacci levels on the chart. Okay. These are really like the only ones that you need. And I really promise you that. Like, yes, you'll get the 21 or the whatever the heck the number was, the 21.8 Fibonacci level. It's like, yeah, there was a little bit of a bounce there, but it wasn't extremely significant, and you couldn't really formulate a high conviction trade based off of that. What what do we use these for? Okay, so I identified a low point, I identified a high point. What I'm trying to do is, I didn't put a trade on here. Okay, obviously, say time is going on, time is going on, time is going on. I want to identify on the chart where is price going to come down to and find support. Okay, if you have from a low point to a high point, so you have a bullish market, generally you're going to experience some sort of pullback at some point. Okay, if you don't want to try to guess if are we going to find support at this price, are we going to find resistance at this price, just wait for the Fibonacci level. Okay, draw your low point to high point, then you can see, hey, the 38.2% Fibonacci level is coming up. We're probably going to have support off of that level. This is the second thing. You've identified the level, so it's this 24,072 level. Okay, just this yellow line that I'm looking at on the chart. What you're going to want to look for first before entering into a trade is confirmation. Okay, so we came down to that 38.2% Fibonacci level. Okay, we bounced off. Great. That's confirming that we have a little bit of support there. We tested it a couple more times. This is the 1 minute chart, so 4 minutes, and then we really got to push. I'm sure if we pulled up the volume chart on the bottom here, let me see if I can actually get it. There's increased volume amongst these 4 candles right here. Okay. And one of the best things to have on your volume graph is the average volume. So you can see when there's above average volume happening. Okay. That would indicate that, hey, like we're getting a lot of support at this 38.2 Fibonacci level. And then you see, obviously, there was a lift off of it. So that's the trade that you're waiting for. That's a high conviction trade there. I mean, look at no point would you have been in drawdown at all. It's all just profit. Okay. So you never would have had to put on the trade and then experience one of these red candles and you're like, oh shoot, I'm like losing $300 in this trade already. Now you're losing conviction in the trade. Now you set a tight stop loss and maybe you get wicked, right? Which is like the worst thing, because say you got long here, but you got wicked. So you got stopped out, you booked a loss, and then boom, you were right. You could have made like $500, or $700. I don't even know. That's what you're looking at when you're trying to do a Fibonacci play. And I'm sure if I move this point to any of these other highs or lows, I'm just going to try to move it down to this one. Like, yeah, like again, like you have statistically significant areas. This is actually a great example right here. So say you're sitting here, this point in time, 10-12. You came off of a high. You're getting a red candle, you're getting your second red candle, you're getting your third red candle. Your question in your mind is, at what price is it going to bounce? Okay, where are we going to start to experience support on this very short low to high trade? Okay, you draw your fib from the low to the high. Okay, again, this is, like I said, this is a great example, okay, of why you don't just say you're at this point in time, now this candle starts to get painted, and you don't just put a limit buy order right here. Okay, why don't you do that? Because you want to wait for that confirmation. Okay, you want to wait to see if the first Fibonacci level is going to be statistically significant or not. Okay, so that's what you're waiting for. And it pays to wait. It really does pay to wait, because if you just wait, you actually got more support at basically the 50% Fibonacci level. And this is a 1 minute, so it's a really, really lower time frame, really drilled down, really granular. So like the support areas, the resistance areas, they're not going to be an exact science, okay, on these lower time frame areas. But again, you want to wait for confirmation. Why? Because there was enough time for you to wait make sure that this area was going to act as support, this Fibonacci area, okay? No matter if it was the 38.2 or the 50% Fibonacci, doesn't matter. Just wait until you get confirmation that there is support here. Because if you entered here, great. You waited for confirmation. Now you're lifting. If you entered here, you've already had that confirmation off of the, it blew through the 38.2, but you got 50% Fibonacci level support. There's still ample time for the trade to play out. So don't be greedy. Don't be too late. Wait for confirmation. You want high conviction trades because this is always the better thing. You start to look to the right. You had even more upside. It's just upside, upside, upside in these really high conviction plays. Instead of, oh, I'm just going to get a limit buy order, and then you get scared because you're losing money and the price is continuing to fall. You're not finding support, and then you get stopped out. Don't let that happen. It pays to wait. So those are just some ways that you can use the Fibonacci levels. Anything to add, Alex? Anything I might have missed?
Honestly, I thought that was a great masterclass to
Yeah,
be
sure,
fair. There,
right.
I would use it in the exact
Yeah,
same
yeah.
way. It's funny as well because when you were going over your strategy, and I didn't know this previously, as Coach Tony said before, this is the first time we're meeting. My strategy
Mm-hmm.
on the scalping markets is also based on orb. So we seem to
Mm-hmm.
be
Yeah,
having
yep.
some crossover some
Yeah,
crossover
yeah, that's
here.
good.
But no, I use all of those as well. If there's any deeper retracement that it goes into, or it doesn't look
Mm-hmm.
like it wants to push past the 0.618 or whatever you're looking at, yeah, I'll leave that. I'm not interested in them. Those are the ones that I know. When I feel like when you start to get out of that range, less and less people use them. And when I was talking about
Yeah.
before, psychological levels, key psychological levels, you want the most people to be on your team, on your side, using these
Mm-hmm.
things here, these levels, and these are the best ones by far. They're the ones that everyone knows, no matter who you're being taught by. These three levels here, they are being taught. Everything outside of this, you will start to drop off on numbers, and if you see it as a bell curve, and either side of it is less and less, as you go out, less and less people, which means the trade that might look fantastic is really not backed by anyone. So
Mm-hmm. Yeah. Yeah.
stick with these three, and you'll be pretty set for sure.
Yeah, yeah, exactly. And like we said, before when we had here, I'll literally just go back to apply defaults, right? This is your default template on Fibonacci, and it's like maybe I'll put a limit buy order right here, and the freaking red candle just like just right through, like totally no support
Yeah.
there. So again, I mean, this is one of the great reasons why Hola Prime TV exists, is that like you learn that, hey, like don't pay attention to that Fibonacci level, okay? At least for me, like I pay attention to the 61.8, the 50, and the 38.2, okay? And this will really help you start to identify what are the high conviction areas, what are the, I guess, greatest statistically significant areas. Okay. Why do those matter? Why do I use that terminology? Well, it matters just because what Coach Alex was just saying. You want the most amount of people on your side, right? You want the most amount of people literally looking at the same level saying, hey, there's probably going to be buy support at this level, or there's going to be like selling resistance at this level. And say there's selling resistance and the market starts to top out and then it starts to come back down and you get short and you make some money, right? Like that's what you're looking for. um, you want the most amount of people doing the same stuff as you so that the trend that you're trying to capture or jump on top of ensues. Okay, so that's really what we're looking for. Let's see here. Let's see. I want to just go back. Yeah, sympathy. How you doing? I'm not sure if you've been here the whole time in the chat. We were reading off a couple of the comments before. Guys, any questions, comments, throw them in the YouTube chat. And again, that's where the chat is being read off of. So if you're watching us on X, please be sure to go over to the YouTube channel and yeah, take a look at what's going on in the chat. Um, Hopefully, we can get a little bit more engagement over here. My God, it is quiet markets to say the least. Let me reset this chart view again. Nothing happening in the Nasdaq. Just nothing. Insane. Let's see. Anything happening on the Forex front, Coach Alex?
Not so much on the forex front. Gold is starting to, obviously, from a scalping point of view, soar up. We're getting a little bit of bullishness coming into gold right now. But apart from that, I mean,
Yeah.
Euro USD is just ranging. That's what it's
Yeah.
doing.
Yeah.
I wouldn't. You couldn't pay me to hop into this market at this current point in time. To be honest, it's not
Yeah.
going anywhere. So I'm leaving that well alone.
Yeah.
It's the epitome of quiet market. I'm looking at it on the 1 hour. I'm looking at it the 1 minute. It's just triple tops, double bottoms. Yeah, and no large candles, so to speak. So I'm just leaving that
Mhm,
alone right now. It's
mhm.
yeah, not wanting to touch it. I think
Yeah. Yeah. Actually,
it's this is a good lesson. Sorry, go on. You go.
no, no. I was actually going to ask you. You're talking about like triple tops, double bottoms, stuff like that. How often do you look at stuff like that? Like end up painting weird stuff onto your chart? Like I don't even know. Like, is this anything? Oh, this is kind of that
Is
M
this
pattern that
anything?
like Coach Michael is usually looking at. No,
Yes.
um,
Yeah, I've
actually,
seen.
or maybe he goes like this. So hopefully, you're gonna want
Yeah,
to see the
yeah, yeah, yeah.
Nasdaq come down here. I guess. I'm not an expert at it. He's been doing it for like over 10 years, like the same strategy and looking at higher time frames. This is the 1 minute, so it's a little bit ridiculous
Bloody
to
way.
to be looking at
Yeah.
something like that. But again, all right, guys, if you have anything that you want us to talk about or take a look at or questions, comments, concerns, hopefully there's not a lot of concerns,
Mm.
but please
Yeah.
throw them into the chat and then just sound off. I like to hear where people are from here. It looks like we got another guy in the chat. X, where is Coach Michael? Coach Michael's off tonight. X. That's an interesting name. X. Not sure if that's your real
Mm.
name or if you might be Elon's son, Elon Musk's son. Is that is that your name? X. You should probably change that. Let's see. Here we go. So yeah, I mean, the biggest thing that everyone's talking about right now is what is a bigger concern, the labor market or the inflation market or the inflation having its effect on every freaking market that we touch.
Mhm.
But yeah, that is the main talk of the town, the talk of the market. Um, who knows? Obviously, there's more to come out later on in the week. Wednesday is the big day for the FOMC. And actually, another thing, another little nice little add on for Project X, which is our trading platform for anyone that's just tuning in, is that there's these little menus or these little icons. So if you go to this Trader Hub, you get the economic calendar all in one place, which is obviously extremely helpful. It's something that you should always be looking at. Okay, depending on the market that you're trading, as you can see, like I have stuff that's like Eurozone, Hong Kong, Canada. You can actually filter out this stuff, okay, by going to the little top right. There's a little filter icon. You click on that, um, and then you can select which, obviously, countries, which level of importance you want to be shown. So obviously, I kind of want to see everything, but just on the U.S. side, I don't really care. Unfortunately, actually, no, we care about Australia, I guess, for this session. Then I'll take it off later. I'm sorry about that, Alex. um, but yeah, and
Yeah.
then it kind of just lays out everything that's happening from an economic standpoint. Um, Retail sales are pretty important. Import prices, yeah, they're kind of important because they lead into CPI and stuff like that. So let's see. Today is September 14th. Depending on where you're tuning in from, it is still the 14th and it is the evening for me. So I am back from the future, I guess. For Coach Alex, it is well into the 15th. It's almost noon, so he's probably going to break for lunch while on air. Maybe we can see what he's going to eat. No, I'm kidding. I'm kidding. I'm kidding here. But yeah. So exactly, this is the thing. Tomorrow, 8:30 a.m. U.S. Retail sales. There's a couple of other again consumer, essentially CPI or inflationary metrics that are going to be coming out. Of course, it's great because it's right before the Wednesday Federal Reserve meeting. So really just drive a fork into the sides of the Federal Reserve governors so that they have something to talk about. And then on Tuesday, September 17th, is that a Tuesday or Wednesday, actually? No, that's Wednesday. Okay. So Wednesday is the 17th. Yeah, we got housing starts in the morning. The FOMC is obviously the biggest one. U.S. interest rate decision. That's what everybody is going to be talking about. Everyone's going to be waiting for. So again, don't trade the news. Okay. I always say, they always say, everyone always says, don't step on the tracks when the train's coming. Okay. So make sure you don't have a position on at 2 p.m. Eastern time, converted into whatever time zone you're tuning into Hola Prime TV from, 2 p.m. Eastern. Don't have a position, please. Okay. Because this could be the first time in a while that we get a U.S. interest rate reduction. Okay. And you don't know what the heck is going to happen. And a majority of the time, at least from my time on the institutional desk, everything happened before, like all the trading happens literally before the FOMC decision. And then kind of everything is screwed after that because the market gets dislocated. Okay. Whether it's to the upside or to the downside, where it's just like anything can happen because there's massive institutions that are putting on not a couple $100 million or even $1 billion, but tens of billions, if not $100 billion worth of crap going through the pipe. Okay. And it's buys and it sells, sell orders, not to mention the options market that feeds into how the underlying prices of whatever options contract these guys are trading. Like it's just a jumbled mess. So that's why you really don't want to have a position on in the market at 2 p.m. Eastern on Wednesday. I'm going to say it a million more times in the 27 minutes that we have left in this session. 2 p.m. Eastern on Wednesday. Don't have a position, please. So, again, anything to add, Alex? Sorry about that. We're gonna get to the chat in just 1 second, guys. But yeah, anything to add there, Alex?
I just have to add that 2 p.m. Eastern on Wednesday. No,
Yes.
don't be in. Don't
Yeah.
be in a
Yeah.
position.
Tattoo it on your forehead. Hopefully, it'll be temporary. But yeah, let's see. Yeah, again, Coach Michael, you had a day off today. We got another one from this guy X. Coach Tony, would you be long NQ overnight? I actually don't trade overnight. I don't hold positions overnight. I don't really recommend it, only because, like I say, anything can happen. And also, we used to do a lot of overnight trading, where you'd you get a signal from an algorithm and you put a position on, and maybe you definitely set a stop loss. Because you don't know exactly what the hell is going to happen overnight. But then on a personal level, on a personal note, you never really get good sleep when you have a position on overnight because you're either always checking it, always looking at your phone, or you're just always thinking about, am I losing money or making a crap load right now? So just don't do it. And a lot of arbitrary price movements happen overnight. I come from obviously trading the US session. And when we go to sleep, obviously Hong Kong is well within to its trading session. The Australians are doing their thing. And then you get the London Open. So like there's other markets that are influencing whatever it is that you're trading. So it's just like you might have a long bias in the NASDAQ overnight. But Hong Kong might come in and be like, hey, yeah, we know something. Our spies and our computers picked up some sort of weird thing, and we know that the market's going down. So I don't know. So just be careful out there. No, I'm not going to be long NQ overnight X. I'm not going to be doing that. Let's see. Actually, we got one for Coach Alex here. It says, from Sympathy, Coach Alex, can you please teach us how to use the VWAP indicator as confluence to taking entries on swing trades slash scalp trades? Alex, do you use VWAP, first of all?
Yes, I actually do use the VWAP. However, I do not swing trade. I don't swing trade. Haven't. Oh, gosh, in
Yeah.
years. Swing trading is not my deal anymore.
Yeah,
I
it's tough
mean,
to stay in
I
there.
can't remember if you. Yeah, oh, really is. I don't know. Even when I'm day trading, which I do very often. Maybe I'll hold it for a couple of hours. That's what I'll be looking at. So if you want to learn it on the lower time frames, I can help you out. But if it's swing
Mhm.
trading, unfortunately, I wouldn't be able to help you. I'm sure the principle's very, very similar, but it won't be exactly the same. However, later on tonight, in how many hours? 5.5 hours, roughly. I will be
Mhm.
going live. So if you are around for that, I will have my VWAPs up, and you can also watch it through there. But again,
Yeah.
it is going to be on scalping. It's going to be on the lower time frames, and even when I
Yeah. Yeah.
do
Yeah.
day trade, it's going to be different. So yes.
Sure. Yeah. 100%. Yeah. Um, yeah. And then, I mean, I generally do use VWAP, um, but I wouldn't say that I'm looking at it to time my entries. I'm more or
Mm,
less using it for support and resistance levels for sure. Like I'm not
yes.
getting in just
Yeah.
because the price is falling down into the VWAP area. Okay, I'm
Hmm.
using it again as support or resistance, onto overlaying onto whatever else I might be looking at. You know, the 21, the 200, the 9, um, and then obviously how quickly we got to a VWAP area, because yeah, VWAP is for sure important. It is literally one of the things that we use daily on the institutional desk. It's pretty much how. Well, let me say this for institutional brokerage traders, so guys that get client orders. Um, some of you guys might ask, like, how is it that large hedge funds send an order to a broker and then that broker manually executes like a client order? Why don't they just put it into some algorithm and have it do it itself? And it's like, it's a good question, because the industry is very slow to still let go of some of the old practices. And they have this thing called VWAP, which essentially is the price that you would get if you threw your order into an algorithm. Okay. And what do I mean by throwing your order into an algorithm? So these hedge funds guys, they're not trading one or two contracts, obviously. Okay. They're like, I need to get long whatever. Okay. Here's 100,000 contracts or 100,000 shares of something. Okay. Or a million. And generally it gets sent to a guy that's like me sitting on the desk. And then I'm supposed to go out there and execute the order into the market. Okay. I could put it into an algorithm that would essentially guarantee that that client got the VWAP price or a little bit better, or I could try to do it myself and essentially beat the VWAP. Okay, that's why VWAP is so important, because I mean, we're still sharing my screen here. Let me just remove some of these drawings for you guys. Okay, here we go. So, say this pink line is the VWAP on the day, the sessions VWAP. As we start to come down in price and start to approach that pink line, which for this example is the day's VWAP, we're supposedly going to get support off of that level. Why is that though? Well, basically, because that price is so important that if the price has been elevated from it, you don't want to buy the underlying contract at a price higher than the VWAP. Okay. You want to buy it at the VWAP, if not below it. Okay. Which leads to price alpha or price appreciation in terms of order execution. So that's why it's so important. Generally, VWAP provides support or resistance levels. All right. So again, you don't want to live or die by the VWAP. Okay. But it can
Mm.
definitely be helpful to try to figure out, okay, is this trend going to continue? So, like, say, we're going up, 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 up to the right, and then we start to have a little bit of a pullback down to the VWAP area. We should see some sort of support, right? So the price should bounce off of it and start to continue higher. So that's what we're really looking at it for. Other than that, there are obviously a million different indicators under the sun that you can start to look at to kind of, again, help you paint a picture of what it is you're trying to do. But VWAP is only one indicator. Okay, like I said, we don't live and die by the VWAP. Okay, VWAP also means different things to different people, and it depends on your trading strategy. I know some people that they say, yeah, I know what VWAP is, but I don't look at it. So there's people that are also in that camp. Why? Because it just doesn't matter. Maybe they're on such a low time frame, like the 30-second chart or the 1 minute chart, that they're just like trying to scalp like just for a second, and like they really don't care what a VWAP is, because they're not looking for big moves and then a support area or big moves and then a resistance area. Okay, they're just looking to like trade the chop essentially. Um, so yeah, exactly. Sympathy. That's a great question. And then someone else following up on on the VWAP, Webb Rashville. I hope I pronounce it right. He says, "Can the VWAP be used in demand and supply strategy?" Hmm. That is a good question. It depends on the supply and demand time frame that you're looking at. So, sorry, Coach Alex, have you ever done the supply and demand zone strategy through your trading career?
Maybe when I was starting, but I'm not the
Yeah,
biggest supply and demand zone fan. I think it can work, and people make it work, but I've never really gotten into it myself.
yeah, yeah. So yeah, I mean, it's a good question in terms of VWAP. Let's see. So yeah, in terms of VWAP, can it be used in the supply and demand strategy? Again, if you're using supply and demand zones, so S&D zones they call them, but you're using like 4 hour supply and demand, that 4 hour supply and demand or demand zone is going to be very wide. Okay,
Hmm.
because you're looking at a 4 hour bar, a 4 hour supply and demand zone area. So like again, you're going to be. Let me just clean up my chart here a little bit and let me try to annotate on this chart. So let me try to form a rectangle. So again, this is just a NASDAQ. Okay. Um, say we had this area is some sort of resistance zone. Okay. The VWAP on the day, say this is the 4 hour resistance area. So supply and demand zone area. And then where's my tool here? And then the VWAP is something like, I'd say it looks something like this. Okay. So it's that blue line. In this scenario, the VWAP on the day or the session doesn't really help you in trying to identify a longer term or a higher time frame supply and demand zone area. Okay. And I could even, do it like that. So again, this is when you start trying to marry multiple indicators into one thing. Like I said, if you're looking at supply and demand on higher time frames, you might not really care about um, the session's VWAP. Why? Because like you're trying to capture large moves in high demand or high resistance zone areas. Okay. And you don't really care about really what your price slash execution looks like, right? You could get into this up here or you could buy down here. And that technically is, a 20-point spread, which is, I mean, it's not massive, but like it's still something. Okay, especially if you're looking to play some sort of VWAP bounce or something. Okay, so they just, more of the story is that they play into different strategies, and you got to be careful. Okay, if you're using supply and demand zones, I actually traded supply and demand zones for a while, and I almost found that like all I needed was the supply and demand zone boxes. I mean, on mine they were like boxes and lines. But again, like say you had 4 hour demand here, but then let me go back to my rectangle. But then you had like 30-minute resistance here, right? Like it's not massive, but like there is some sort of trade to be had in these two boxes, right? So again, if this blue line was VWAP and you say, hey, there's like a lot of supply up here, and we're probably going to get a sell off from it, and we do, the sell off starts to ensue, but you're like, oh crap, like there's VWAP right there, there might be support, and then just price just blows right through that level. What good was knowing where the VWAP is? It really provided nothing to your strategy, and you might as well have just stuck with your supply and demand zone, your classic bare bones supply and demand zone strategy. So again, pretty good questions coming in, guys. We actually only have like 14 minutes left, so I don't know if we want to continue on with the Q&A, or Coach Alex, I'm not sure if there's anything that you want to kind of touch upon, any of the topics that we've talked about. I feel like I've been just kind of steamrolling through, so I'm sorry if you were like, feel free to interject, because like
Yeah.
I don't care. I do not care.
Yeah.
It's fine.
It's fine. It's all good. I think again, one of the funny things, and this isn't true for all traders, but I think there's some simple truths in trading that if you've been around for a while, most of us accept as fact and will generally agree on. There's a million different ways you can make money in the market, but
Yeah.
as Coach Tony was saying, especially what's on the screen and what I'm looking at over here on my monitor, a VWAP and supply and demand for me don't really mix for the reason why we're on the screen here. Just because it's not that they're competing, but they're almost two very separate things. And it's kind of like going, oh, okay, I'm going to use 80% smart money concepts, and then I'm going to use the rest as ICT. It's just some things that just don't match. I think it's such a great example when you look at it and you go, that VWAP is just getting in the way especially when you look at supply and demand. It's not necessarily meant to have a VWAP in there, and you should look at them how they're originally created and go, well, what was this actually intended for? And then look at things that will help you along. Maybe there are some EMAs instead. I know VWAPs and EMAs or whatever we're talking about, but you can adjust them. You can change them up. There are so many different ways to go about it. And in that sense, you go, oh, I've got some synergy here. And that's what I'd be looking at. When you go and you learn about supply and demand or other smart money concepts or fib retracement tools, you go, well, let's do a bit of research. How was it created? What was it used for? Like, what was its original purpose? And from there, once you actually understand it, not just understanding, okay, if I do this, this, and this happens. You've actually got like a decent understanding of why it came to be, how it came to be. Then you can figure out what's going to work well with it. Otherwise, you're always going to be hampered by that little bit of lack of knowledge. So my advice to you is go with anything, go back and figure out why this thing was actually used and what its purpose was. And you'll have a way better insight into how your strategy is going to perform in the market. That's what I'd be adding on to it there.
Yeah, 100%. Yeah, it is one of those things that because there are so many strategies out there, you can for sure get conflicting indicators. Okay, guys. So it's one of the old adages, like if you find something that works, stick to it. Okay, don't try to change it. I feel like that really does happen to a lot of people. Is they find a strategy, they say they do like 10 trades in a row, and maybe they're all winners, right? It's a little bit of luck, probably, because like you're not going to have like 100% win rate on trades, for sure. But then they try to add on more indicators, and you try to start tweaking things and doing things a little bit better so I can get a little bit more precise. And again, you start to introduce not just conflicting indicators, but conflicting indicators that lead to analysis paralysis, which is obviously, um, having this one indicator say one thing, having this indicator say another, and then maybe you have a third indicator that's not really adding to your conviction in this trade. So you don't do the trade, right? And then had you just listened to the first two and done the trade, maybe it would have been a profitable trade. So again, like you don't need like a million different lines on the chart, and you're reading all these things, and you have like the level 2 data, and you're trying to like see all the orders that are coming through the pipe. It's like you're not a robot, okay? And you're also not looking for a trade. Like, you shouldn't be looking for a trade every single second of the day, because again, guys, like,
Mm-hmm.
I'd say one of the worst things that you can do is overtrade, okay? um because it just leads to so many problems. And like I always talk about, I know that we're still sharing my screen here, this little order area, right? So this is for the futures trading platform, guys. Coach Alex, he uses a little bit of a different platform. It's called GUI Trades. This is Project X. So again, this is the future trading platform, is through Project X. There's this little button here, okay? It says reverse position. It's not illuminated right now because I have no position, okay? But it's really a dangerous button, because it just allows you to flip flop your position. Your net long, click it. Now you're net short. Your net short, price starts going against you. It goes higher, or you're losing money. You flip it. You're net long again. Price starts to come down. Oh crap, I'm losing again. So you just lost. Don't overtrade. Okay. And again, it comes back to your strategy. You got to ask yourself, why am I getting into this trade? Okay. After you get in, or generally before you get in, when I get into this trade, the next question you want to ask is, what am I looking for to happen? Okay. Say you're getting, let's see, let me add some of these indicators here. Okay. I'm just going to literally pull up a classic indicator. This is the 5-minute chart, 2 MAs. We got 2 MAs crossing. Okay. We've had price appreciating, prices going up, prices coming down a little bit. The MAs start to converge. And what happens? The price goes into starts to go into bearish territory. Okay. For essentially the rest of the session. That's just an MA cross. Again, here you have the shorter MA, which is the 9, the little green line, crosses over the 21 MA, which is the purple line. And now the shorter one is leading the longer one higher. So the green one is leading the purple one higher. And what happens after they cross? Price goes up. Okay. So like that's just 2 little indicators that you could start to use. You want to use those when there's volume to actually, sustain these moves. So you want to use them during like the morning session of the US session, or if you're trading Hong Kong or London, you want to go into the high volume times when you're using volume based indicators. Okay. So again, not using too many indicators, not over trading, understanding why you're getting into a trade, what to look for, to get into the trade, what you want to happen. And then I think another one that's almost just as important, if not the most important question to ask yourself is, what needs to happen for me to get out of this trade? Okay. But you should have 2 answers. Okay. Get out of this trade in profit. So, like, at what point do I set my take profit, your TP? Okay. And then when do I know that, hey, my thesis of this trade, the reason why I got into this trade, is now invalidated which means it's just a technical way of saying this trade is not freaking working out. Okay. And how do you know it's not working out? Well, you probably have losses. Okay. So again, it's one of those things that you just need to look at. You need to know why you're getting in, what you want to happen, what you're going to do to get out, whether it's a profitable trade, but also most importantly, what needs to happen for me to get out and tell myself, hey, this trade is not working. It's not going to work. So stop hoping, cut your loss and move on. Wait for the next one. Okay, those are all like the 4 most important questions that you need to ask yourself when you're in the trade, before you get into the trade, after the trade, all that type of stuff. So again, it's just food for thought, guys. Everyone at the end of the day has their own trading strategy. Some guys, like I said, in like the middle of the session, coming from an algorithmic standpoint, if you have an algo that you're trusting, you just need to, I mean, I've been doing it for a while. You just need to blindly follow the algo. Okay. Because there's been times where I'm like, hey, the algo just gave a signal. And say like the previous trade that the algo did was a loser. Okay. So you're like, I don't trust the algo so much anymore. Then it's saying, hey, buy. And then it gives a buy signal. The price starts to come off. You're like, I knew it. I didn't get into that trade. I'm not losing any money. And then something happens where just up and to the right, it's the biggest trade all week. You missed it. You're an idiot. You didn't listen to the algo. That has happened. I can't even tell you how many times that's happened. Again, the trading psychology. So now you took a loss because the algo lost money. At least you did what it said. This time the algo made money. You didn't do what it said. So now the next time you're probably going to double down into the trade, and maybe it's a winner, maybe it's a loser. Okay. That's not what you want to be doing. Okay. And this is how you blow up your account. You blow up your account, you lose a bunch of money. But aside from that, blowing up accounts, losing money, it's the mental aspect. Okay. You start to be like, you get to a certain point where you're taking on losses. You're not even doing the same strategy that you set out doing that was initially profitable, that you should have just stuck with. You knew nothing really about the market, the crap that you were trading. You just knew, hey, I look at this, I look at that, I make a trade, I make money. Cool. Great. Now you filled your brain with all this other crap, not to mention you're losing money, not to mention now you think you're having a crisis. Okay. I forget what it's called. There's some sort of crisis called, or some sort of fallacy. What's it called? It's where you think like you're on a really hot streak and then you start to lose. And then the voice inside your head tells you, dude, you don't know shit about trading. Like you've been doing this for 10 years, but you don't actually know anything. I forget what it's called. Imposter syndrome. That's one name for it.
Yes, that's it.
You think you just don't know anything, right? You just got lucky. Or you're just doing this job and you just keep on putting fuel on the fire to keep it going. But like it's a losing game, you know? So like don't fall into that. Okay. I'd say the biggest difference between myself, so any of the coaches here at Hola Prime, because we all have extensive track records to be a coach at Hola Prime. I'd say the biggest difference between myself and then like someone that's not yet a professional trader, or maybe they're novice, or maybe you've been doing it for like 5 years, but you're still like kind of battling the day in, day out, the grind of trading. The difference between myself and someone like that is that, guys, I go through FOMO. I get pissed off at myself. I kick myself when I am down, when I just took on losses and I did stupid crap. I doubled down into a position that was losing and it just turned into a larger loss. Like I get that. The difference between myself and somebody else is that I try not to, I really try not to fall for it all the time. Okay. I still experience FOMO. I still experience, all the aches and pains that come with trading. Okay. But you just try to not fall for them. Okay. And that comes through repetition, through time in the chair, going through all the market environments, taking trades. Okay. Just be cognizant. You're not alone. All right. So Coach Alex, anything to add on top of that?
Yeah. Wednesday, 2 p.m. Eastern Time. Do not hop into that trade.
Yes.
Do not
Do
hop into the
not
trade.
have a position. Yes, do not have a
Yeah,
position. Be flat Wednesday, 2 p.m. Eastern. But I think with that, honestly, guys, thanks for tuning in. That's our time. Again, this is Coach Alex and myself's first session together. I really hope to have some more. Dude, it's been awesome talking to you, and I hope
absolutely.
to see you again soon.
For sure, for sure. I've really enjoyed myself today, so I'd love to be back.
Awesome. Yeah, sweet. Enjoy the rest of the day, Alex. Enjoy the sunshine, the Aussie air, and thanks everyone in the chat. Tune in again. We got a couple of hours. We're gonna have Forex Fire, do it all over again, and then we'll have the futures coaches on later on. So thanks, guys.
Mhm. Perfect.
Hola Prime, trade with transparency.